Welcome to another episode of Because Money, where we are having real conversations about money, finance, and important stuff like disability. No, really, it's important. Disability insurance. We have with us the senior financial planner from Spring Plans at find at springplans.ca, Julia Chung. She knows a ton about this. She is in fact licensed to sell insurance in her past and works a ton in the insurance industry. So she knows a lot about this, and she's going to give us a lot of details about not only finding your own disability insurance, which we talked about with Chris on a previous episode. And by the way, Chris does have his insurance settled, and it is an important thing to do. But she's also going to talk a lot about the insurance that you're going to get through your group plans. So stay tuned. It is actually a lot more exciting than this intro is making it sound. It is important. And of course, if you want to support these real conversations about money and help keep this podcast going, please do visit us at patreon.com/becausemoney, where you can donate some of your hard-earned money to help us keep this conversation going and to pay for some of the behind-the-scenes costs. So stay tuned for the episode, and we hope you enjoy it.
It's a conversation and a product and a problem that lots of people need, but not many people want or are even asking right now.
No, because I'm not going to be disabled. I'm not going to plan for that to happen. It's sort of like, the biggest thing that I expect to hear during a discovery meeting is the answer to, do you have a will? The answer is no. I'm expecting you to say no. And the reason why is not because you hate your family, which is what you would think. Like if you're not writing a will, you're saying, I hate my family and I would like you to fight. Because that's the way I look at it. But the reality is that nobody hates their family. That's not what they're saying. What they're saying is, I first of all, I don't want to think about this. This is really hard. I could spend time, money, and energy on it. And in every single scenario, I will never experience the outcome. I will benefit zero from this, right? And so there's no reward for writing your will. There's no, and we live like an immediate gratification kind of society, right? So what's the benefit? I'm going to spend a couple $1,000s on getting my estate put in order, or I could go to Mexico.
Yeah.
What's more fun? Mexico, for sure.
It most definitely is. But it's kind of, disability lives kind of halfway in between those two worlds, right? Because it's one of these things. John kicked off our last episode with like making it super real moment of just like the problem with disability is you can have somebody who can't feel like they can contribute, but the costs go way up. Like it gets even more complicated than life insurance, which is clear cut. And not even just complicated as a product, because that's one thing, but like you do benefit from having disability insurance, but it's a situation that nobody wants to think about and nobody wants to think is possible. And I also think that it's not necessarily like something that people, I don't know many people that I know are on disability. You know what I mean? Like that have disability insurance and use that resource. And maybe there are people, but that discussion, like in the same way that people dying or people using life insurance or people, those people, indeed. But and that's, I don't know if that's part of it. Is this the fact that fewer people have disability insurance, or fewer people are talking about, having disability and living on disability? Like, I don't know, but either way, it's really hard to imagine, and it feels more rare than it actually is if you look at the numbers.
You sort of have these unconscious rules of thumb in society about what personal finance does, and what we blog about is fighting some of that. Like people seem to just have this 10% rule of thumb that adds as to how much they should save, and actually doing a plan to see how much they should save. And people have this sort of milestone in their heads that, as soon as they become parents, that's when they need to go and get life insurance. Not that they necessarily do with great regularity, but at least there's some sort of unconscious awareness of life insurance in the general population that I really do not see when it comes to disability insurance. There doesn't seem to be a milestone that's out there in people's minds as to a time point to get disability insurance, or they might not even be aware that it's out there and exists. And In some cases, it might be more important insurance that, like I was making the example for our own family, where if one of us had died, I mean, the income family with no flexibility to cut costs. So if one of us died and we didn't have any life insurance, I mean, we could adapt by having the surviving spouse and the kid move to a smaller apartment and cut costs and live off the remaining single income. It would not be ideal, but we could manage. If one of us became disabled, and that's not entirely a hypothetical situation for our family, without disability insurance, then we have the costs of maintaining a larger house for all these people continued, as well as even increased costs related to healthcare and that sort of thing. But then the income's gone. And so the disability was the more important thing to try to insure against.
Totally. That is like so incredibly true. Like that the risk of becoming disabled or ill is so much greater than the risk of dying, sort of like within your working years. I mean, we're all going to die with a 100% chance of dying at the end of this life. But I mean, between, you know, now and the point that you stop earning money, your chances of becoming disabled or ill are much, much greater than your chances of dying during that period. So the risk is greater. The costs, just like you point out, is so much greater. There's just, yes, the whole thing drives me insane because people don't really think about it. And especially when you're young, you don't think about it. And, you know, particularly with young men, those are the people who are often going to hurt themselves because you're more likely to be in a physical labor job and you're more likely to do stupid things because, you know.
Because just the man thing, just that, I think that stands for itself.
I think it's hormonal.
I don't know exactly what it is. I'm sure there's been science done on it. There's been rampant science done on it, but the results are always the same. You know, young men do things that later in their life they look back and say, that's really dumb. That's super dumb.
Like, I should be dead now, and I'm not. So that's super. But maybe I did end up being disabled. And one of the things that I find really frustrating about disability insurance conversations that I have, particularly with business owners, is, oh, well, you know, it would take, you know, almost the deepest kind of disability where I'm in a coma before I would stop doing my job. Because I can do my job with broken arms and broken legs because the only thing that matters is here. Well, guess what? Like the number one disability claim is right here. It's what's going on in your head, and it's things like depression and anxiety, and for someone very close to me, there's brain injuries, and those can happen to everybody, and there is no job that you can do effectively over the long term with that. And everybody's at risk for those things.
And even things that aren't directly affecting your brain in terms of a brain injury, you can still have cognitive deficits just from other things that happen. Like if you get cancer, you might fully recover all of your mental capabilities once all the cancer's gone. But while you're on chemo and while you're on radiation, it's a well-known side effect that your memory and your concentration are going to suffer.
Absolutely.
And the fact that, you know, your body is pretty connected. 2 broken arms and 2 broken legs. You can say, oh, but I still have my head. You don't have your mobility. Your entire routine in your life is rearranged in a huge way. Like, just take the moment. Like if I take my moment to really think about, you know, I have been lucky to have no major injuries in my life, but I had fractured my ankle, I don't know, 3 or 4 years ago, and was so surprised at the effect it had on my mood, on my life, on my ability to work. This was a fractured ankle, but I couldn't move. I couldn't do my life like I normally did. And so all of a sudden, especially living in Toronto, all of a sudden I had to change things. And you start feeling trapped and you start feeling like you can't run your life the normal. That's what we're talking about. That's this, and that's a fractured ankle. So like when you extend that in larger ways, like that's the thing. And yet again, it's a bit like having the retirement conversation with people to say, you know, I never want to retire. And you're like, that's great. We don't plan for it. Some people plan for it because they want to be done working and they're done and they want to do other things. But you don't have to plan like that, but you do you should think about the fact that maybe you won't be able to, or maybe you want to not have to. And I think that that's a really key thing with disability too, to say, you know, yeah, maybe you can do your job completely well with major injury, but wouldn't it be nice to maybe not have to, or to have a bit of just a bit of a safety net in place, so that you don't have to do it right away. You know, you can find 6 months or 9 months to just adjust to something.
Well, and to heal, right? Like one of pretty much the number one way our bodies heal is through sleep. And if you're like most of the freelancers and business owners that I know, you probably don't get enough of that, right? And that's already a problem. And so now you're disabled and your body needs to heal some part of it, and you're still not sleeping. In fact, you're sleeping less because you have to work harder to get to the places where you're going if it's just a physical disability. And really, most of the time, for most people, it's going to be a cognitive disability. Like when you look at the statistics of what people claim on disability, it is often, mental, nervous system kind of stuff. So, I just think people should think about it a little more deeply. I think one of the reasons why a lot of people don't, though, is that it's often covered under group benefits. So if you're a regular employee and you have a good benefits package, you're going to have very often some kind of disability insurance. So if you have always kind of been an employee, then it's never something you think about. And you're like, I'm going to go open my own business like everybody seems to be doing these days. And you're like, oh, okay, I need this much money, right? But they don't factor in the extra benefits that they got and how much those actually cost to go out by yourself. And then they choose not to have them. And then, they get in a car accident, they can't work, and there's no safety net.
Can I ask, so one of the things about disability insurance is that you can't just say the words disability insurance and it covers the nature of every policy. There's vast differences from policy to policy, from what's covered to what's not, to all of these things.
Which makes it even harder.
Which makes it really hard. So what's your general understanding of, your generic, long-term disability plan? Is it okay? Are there kind of major holes? One of the things that when I was talking to the broker that I was working with just this last fall, he was talking a lot about, what's covered, and just the fact that a lot of the time it's like physical injury will be covered, but specifically often things like soft tissue damage will not be covered. So structural kind of damage, he has better words for it. You'll have to forgive my kind of like lack of technical knowledge, but like specifically talking about like structural, those issues are covered, but once that's better, it's fine. But like even within the realm of physical injury, soft tissue stuff, no. And you're like, well, that's usually more likely to cause lasting chronic problems than.
That's why they don't want to cover it.
Exactly. and that makes sense on a certain level, but like I would imagine that even with the people that are covered under their work with a good benefits package, you have to be kind of aware of what's actually in there, because I would assume that there's a wide variety of coverage within that, especially if they can slap the L, like long-term disability stamp on it. I've got that. But what do you actually have? Do you have experience? Like, what's been your experience kind of diving into some of the policies and seeing kind of what's actually there and what's not?
Well, there is nothing more fun than reading disability policy contracts, but and I've read a lot of them. And so there's really there's the group disability insurance, which you get through your employer or through an association that you belong to, and that is much cheaper usually than the insurance that you can get individually. And the reason why it's cheaper is the risk is spread across everybody in your employer group, right? So everybody kind of shares the cost. It's like socialism kind of insurance. And there's a couple of things that I'm looking for when I'm looking at someone's benefits package. First thing I'm looking for is short-term disability. A lot of people don't have short-term disability, so I'd like to know what they have instead. The reason why we're looking at that is because long-term disability only kicks in after a certain period of time. So you are covered after you have been considered fully disabled by the rules of this contract starting at such and such a date. Sometimes it's 17 weeks, sometimes it's 191 days. So you have to figure out what that is. For someone I work with, it's 6 months. So what are you supposed to do until that happens? Now, your employer may have purchased short-term disability. Your employer may have a sick leave policy that will cover that, or your employer might have nothing and be like, too bad on you. You're going to have to be fully disabled for 4 months, not collect any pay.
Yeah.
Figure it out. So that's one of the places where that, like having 3 months worth of expenses that you hear about all the time available in cash, that's one of the places where that number comes from, is that a lot of times you have to wait for 3 months or somewhere in there for your disability to kick in. So check that on your group policy first. Do you have short-term disability? If you do not have short-term disability, find out if your employer self-insures or if you're expected to cover that yourself. That's the first thing I find people miss.
Sure.
And then when it comes to the long-term disability through your employer, there's a couple of things you want to look at. One is the benefit period. So usually benefits periods will be to your age 65. Yeah. That's the good one. 5 years, they'll tell you, oh, most disabilities don't last longer than 5 years. Oh, super. I'm going to bet on that one because it's cheaper. But, oh, you've got one of those disabilities that lasts 6 years. Too bad. Right? So you don't want that one. And then there's some that are 2 years. That's not good either. That's super bad. So take a look at that benefit period. A lot of times the group disability coverage will say, if you're not able to complete the regular duties of your job, so it's sort of like assessed between you and your manager, that you are therefore fully disabled under the terms of this contract. It's usually fairly simple what that means. But then what starts to get complicated is the own occupation period.
Yeah.
So the own occupation period is generally 2 years, whether you're in a group plan or an individual plan, and that says that as long as you can't do the duties of your regular job, you are considered fully disabled for the first 2 years. After that, if you can't complete the duties of any job for which you are reasonably educated, then you're kicked off. If you can go do something else. But again, what's important to remember there is that it's like for which kind of suits your education. So they're not going to say, hey, if you can go flip burgers, get lost, right? They're not going to say that to a lawyer.
Yeah.
Right. But what they will say to a lawyer is, oh, okay, you're too disabled to go into client meetings, but maybe you can teach law school. Or
that seems way harder than going to client meetings.
Probably.
But but your example still stands. It's always funny when I think that before I came into finance, I would have been completely in disbelief on how many times the finance world uses the word reasonable. It's
and don't get me started on tax code.
but that's where it's written everywhere. It's always funny because there needs to be subjectivity, but it doesn't help give people information. It's what's reasonable to some people. When you look at the idea of an insurance company, it's easy to think, are you going to think anything is reasonable?
Yeah, and from what I've seen with a lot of clients I've had who've been on disability is that to your point is a bigger deal on a group insurance policy than it is on an individual insurance policy. And the other one thing that I ran into, so I had a client who was permanently disabled. She had one of those chronic pain diseases, really terrible. And so because it's permanent, she also qualified for Canada Pension Plan disability benefits, which gives you a little bit of money for you and a little bit of money for each kid that you have. And so she had those little bits of money. But what she didn't know until she found out later was that her group insurance policy, and lots of them have an integrated kind of rule, which is that you can, while on disability, you cannot earn more in total from all sources than 85% of your pre-disability income. So if her disability income from her policy plus her disability from her CPP, including the benefits for her kids, which they don't care if they're for her kids, they add in, exceed that 85% amount, then she owes them money.
So they don't even garnish the next payment. They actually send you a bill.
Yeah, they'll garnish the next payment. But what they did is like, it had been a couple months in. She didn't really know how this worked. She reported the income, and then they were like, oh, yeah, so we're not paying you for a couple months.
Oh, no.
Yeah. And she had 3 kids. Right? And then to try and just get her payments restarted and to determine the right amount. And they said that she owed them like $8,000. And she's like, I'm on disability. What do you mean? I owe you $8,000 and you're like, what?
You guys are the one that pay me. Like, you know where my money's coming from.
Yeah, she's got $0 from any source. And like eventually her 2 oldest kids ended up moving out of her house into the houses of family members because they could afford to feed them because she couldn't afford to feed her kids. I mean, it was really, really unpleasant. And so I stepped in, and I don't do this often. Anybody who's listening to this, don't imagine that this is part of my job, but but I did step in on this case and helped do the math because the insurer was doing a really bad job on the math.
Oh, brutal.
And so we had to like send math back and forth, and eventually I got her payment back, and she didn't end up owing them any money because they had starved her out for so long. Anyway, so that's a horror story. You need to understand your disability insurance. That 85% rule is standard in group insurance policies. So you need to understand that.
It's a really hard, this always feels like one of the big cruxes of especially insurance and kind of knowing benefits and things like that is that really understanding your policy is so important. Just kind of understanding what you have and what you don't have and what you need. But those are really difficult things to do for, your average person they're difficult for people who read insurance contracts all the time. And this is something that when you start to kind of dive into more policies, and as I just start to kind of read more policies now, you realize that like they're just so different. Like it's hard to understand what you have in front of you, even when you get the benefit of seeing multiple contracts, which most people don't get to see.
There isn't like a standardized, this is our most common policy. You can come to us and get these sets of standardized terms, and the only thing that varies is your individualized rate based on your risk. And this one has the Julia Chung stamp of approval, and here are the caveats to that so that you know going in what to worry about. Like, I don't think that exists in any kind of insurance.
It's
definitely not. I wish there's not even standardized
number 205.
This is a big problem though, right? Like, because it's really huge if people don't understand. Like, this is a matter of life or death,
Literally.
in the extreme situations. And yet it's very, very frustrating because I understand there's no part of me that feels like I can responsibly say, well, you just need to read your policy. Because nobody will. But even if you do, I'm not confident that anybody's going to understand what the standards are and what's the pertinent information here that you need to draw out, and until you've seen a bunch of situations, I don't know.
This is like a 100-page legal contract, right? And so in order to determine that, like, whether or not this is a good contract for you, you have to understand whether it's this type of insurance, that type of insurance, that type of insurance. And then you have to understand what all the legal definitions mean. And even like that 85% rule I talked about, if you read the paragraph that's in every contract about that, people are like, yeah, those are numbers.
Yeah, of course.
Like, they're not easy to understand. They're not excellent wording. And quite frankly, I've had my insurance license. Nobody taught me how to read legal contracts when, I went through the process of getting my insurance license. They didn't even teach me about insurance, quite frankly. But I had to learn that from other insurance advisors. So buyer beware with your insurance advisor as well. If they haven't spent time reading legal contracts, they may not even understand what they're selling.
And so the consumer doesn't understand. The people selling them, some of them understand, some of them don't. Fair enough, but it's really difficult. And this is one of the things we talked about last time too, that an excuse that you can find really quickly, and one of the ones that was bouncing around my head was, I don't know how to find a broker. that I can trust. So if I know that both of these people exist, these people that don't know anything and these people that know things, but if I'm sitting here and going, I don't know, like I don't know how to find this person, and I have a few more advantages than other people do. So it's difficult. It becomes this problem that there's multiple layers to why people would avoid it. And then even when they have it, you don't even know if you have it. Like, at least with life insurance, even though there's bells and whistles, if you have it, you have it. You have something that if you die, it will pay money if you keep paying premiums. It may be cheating you on a back end, or be too complicated, or be too much or too little, or any of this stuff. But there's a basic thing there. With disability, it's like, what do you have? Yeah. Is it going to be there when you really need it? And is your thing going to be covered? How much? What does that look like? Are they going to come back and say, oh, yeah, that's the number that's on this thing, but actually we need to look at your last 2 years of income and relook, and this is how much you get, because this was based on that, and now we base it again on kind of your current situation, which is, you were talking a little bit about employed people. It's another, and maybe even more important for people in the kind of precarious work environment, kind of heading out, to make sure that they're covered in the same way. But income proving and all of that becomes a different situation. And, we can talk about the different situation, and then there's always also not everybody can get it.
Oh God, I know. One other thing I just remembered while we were talking was another thing I want people to look for when they have a group disability policy is the non-evidence limit. This is something that nobody reads or pays attention to. So you get your little group benefits package, and it says, oh, my benefit is going to be X times my earnings. And the non-evidence limit is $4,000. Neato. Nobody ever tells you what that means. So what that means is, let's say you earn $10,000 a month, and based on the calculation in your policy, you should be getting $6,000 a month in disability. But the non-evidence limit is $4,000 a month. What do you get? You get $4,000 unless you have gone to the insurance company and said, I would like to submit evidence of my good health, and fill out your form. And then that form is submitted to the insurance company, and then they say, oh yes, you can exceed the non-evidence limit.
So this is something you have to do before you get disabled?
Oh yes.
Okay, see, now I've done a lot of reading of my disability insurance policy from my work. I did not pay attention to that, and now I'm going to have to go back and see if that's in there and do that myself. And again, like Chris was saying, we have certain advantages in terms of like talking to people and this being front of mind, and still we come up short. Like, what can we do to fix this industry?
So I think it would take a lot for there to be a big shift, and in the meantime, consumers are not given the information that they need, and a lot of times brokers aren't taught by the industry enough information to do a really good job. Certainly in the group insurance field, which is where a lot of people have their insurance, a lot of people never end up talking to their insurance advisor. They see their HR advisor, their HR advisor hands them a book, and they're like, pick some stuff, which is sort of like the same thing with your group RSP, right? The number of people have been like, I have a group RSP. I don't know what, I get to pick from these 10 funds. I don't get even the option of choosing the couch potato model portfolio or anything. I have these 10 funds, and I don't know what they mean.
It's just like a guy walking into your office and being like, I have a box. And you're like, great. There's things in it. And you're like, cool.
And you don't get to see what they are or get them explained to you, but you have to pick some.
So let's say you get some insurance of some kind because you watch the podcast and you're like, all right, fine. I mean, as long as I'm on the podcast, I'll just put this up in the little window and I'll go and start shopping for insurance right now. And I'll
which is a great thing to think about.
The podcast, which is actually not a bad thing to do. If you're on your computer and you're not listening to this on your commute or whatever, just go and do it right now. Get it done. We can jabber in your ear while you're shopping for quotes. And I wish, again, I had prepared a list of someone to go to. I mean, as much as we try not to promote and have sponsorships and whatnot, it would be great to just say, yeah, go here and you'll be able to get it. Unfortunately, it is probably going to be different province, and
it is.
And I honestly don't know who to suggest. But let's say you did get insurance, or you're lucky enough that you work for a large employer that has a group plan, and then you just have disability insurance, and you might not even know it. And then something happens and you get disabled, or you die, and you can't communicate to your spouse that you have that insurance. How now, as the spouse, do you figure this out and get the money that you're owed?
Ooh, good question.
Good question. I think the first place to start would be with the employer, to see if there is something there. And then second place to start after that would be, hopefully you have access to those person's bank accounts. Power of attorney, people. Important document. But hopefully you have access to this person's bank account so you can pay their bills. You will see maybe a charge coming out. And say it's an insurance company charge. It'll usually have the name of that insurance company attached to it, so you can call in and they will give you the runaround. And that will suck, and I'm sorry. But that's one of the ways to look for it.
So if I have the name of the insurance company and the name of the person covered, is that enough to just sort of like call, hey, Sun Life, John A. Robertson has become disabled. He's got a policy with you. Can you help me? Will they actually do that, or do you need to come to them with like a policy number too? Or do you have to unearth that from?
Well, ideally, a policy number and the agent who sold the policy. That's the best way to go. So, like, if you have purchased this type of insurance, please share it with your spouse. Give them, if you have a policy booklet, your insurance advisor will, of course, have given you their business card. Staple it to the outside of the policy. They may retire and find something else to do, but at least it's a place to start. But if you don't have the policy number, and you just have like the person's name and the insurance company, they will probably direct you to the agent, but there's some privacy concerns. So the best possible thing you can do is have the policy number in the policy booklet, and then call the company, and there'll be a number for the company on the policy booklet saying, like, if you want to make a claim, call this number. So that's your best way to go. But definitely have power of attorney. I know that's probably a whole other conversation, but power of attorney is really important.
It's actually one we were talking about in the last episode that we recorded, kind of the conversations around with your parents and figuring out, wills, just the importance of having those discussions. But it is really good to know that the kind of pertinent piece of information there are the policy number and the name of the agent that sold. That wouldn't have been something I would have thought of. And so, like, if you're thinking about what's the important information to share with your partner, with your family, with kind of the people that are important, that's what's the first, that you have one, then the policy number. The first one is the biggest, the most important thing.
And what I've seen a lot is people are like, I take all my will and my power of attorney and all my insurance policies and I put them in my safety deposit box. And I'm like, that's a really good idea. So who else has a key? Because if you're the only person who has a key, then no one can open it when you're dead. So
this is another version of somebody walks in with a box. It's in here. No.
But you can't get in there.
I promise. But you can't get in, and neither can I. But it's here.
Exactly. And that's one of the things that I find so fascinating. Is like, but it's really safe and in my safety deposit box. I'm like, awesome. So how are they going to get in? Oh, well, they'll be my executor. Super. How are they going to know that if the will's in the box?
It's fair.
You have to cut it through the steps.
Well, there has to be a communication side of it. Nothing is ever gonna actually replace the talking to a person and telling them you did these things. Documents are great. Documents are not. Communication is not always a replacement for documents. So this is a two-pronged attack here.
Yeah, and having those conversations is really, really hard in a lot of families. Like a lot of people are like, oh, my spouse is just going to start crying. And I'm like, yeah, that sucks. So talk to them anyways. And for a lot of people who are like, oh, I can't have that conversation with my parent. I can't have that conversation with my child. And I say, blame the financial planner. I've been
Yeah.
talking to a financial planner and they told me I had to have this conversation. And very often I will give them a little document with questions you can ask.
Yeah.
And things you can say, because people are really lost. We're really bad at these conversations. I think it's super cultural, which could take us veering off in another direction. But
It's why I'm going to put up the Kickstarter for Potatoes card game of doomsday advice and uncomfortable conversations.
Oh, this is the idea that we had last time. We're gonna have like a dark and a light side of a game, which is like it's John and his like jarring statements that make you terrified about your finances. Like he always like his disability one that finally made me go get it. And then on the other side, it's Sandi and I like hugging you and comforting you about your feelings and telling you that your feelings are valid. So you choose what you need. It's like, no, I need John right now. Yeah. Between
no
Julia
one will buy
saying
it for themselves, but you can buy it for people that you care about but don't especially like.
Yeah, that's family right there. Please. The financial game for people you care about but don't especially like. That's a great tagline.
I think that's perfect. I think that's very, very excellent. I love this. But they really are so hard conversations for people to have. And that's one of the things that's been a big lesson for me as a financial planner, because I probably do think maybe a bit more on the same lines as John does, where it's like, well, here's the information. What? Do the thing, right? Like, I don't understand why you're not doing the thing. And they're like, oh, but feelings and love and tears and things. And I'm like, but there'll be less of those if you do the thing. What? But it's become, over time I've started to realize that it takes people, and it's super okay. It takes people time to get there, but we don't have tons of time. So if people can find some ways to process those feelings really quickly, or reframe, like Pete did in his book, like just reframe it, make it about caring for people. And, like with estate planning and insurance planning, it is the most caring, loving thing you can do for your family. I feel like almost bar none.
100%. I think that's such a valuable way to, and reframing is it's such an important thing to do, just because so many people think differently. We need to be reframing all the time, not because the way that we're framing it is wrong, but just because there are always people that are not reached by the way things are currently framed. And I think that's one of the things in the financial industry in general, is that generally the conversations are framed in certain ways for certain types of thinking. And so it's just about re-looking at the same things. It's so art kind of taking the same 7 or 10 stories and telling them over and over and over and over again. It's just, it is such an act of love. It is such, and this is what, honestly, the biggest thing, and I'll repeat it because it was the thing that got through to me in a huge way when we were talking about disability insurance last time. And we were talking about, in classic hippy dippy Chris way, we're like, well, let's talk about, what's alternatives to insurance for people that can't get it, and, family and non-financial assets. And John was like, dear Aunt Beatrice, I'm going to be staying with you for the next 10 years of my life because I didn't get it, because I didn't go and get a quote for disability insurance. And the truth is just like that, just kind of seeing my inaction as an incredibly selfish thing, a selfish thing to say, this is not just about me. If I become disabled, I become I'm trying not to say the word burden. That's how I felt. Because it's not, I don't want to try to say that, but you become something that has to be taken care of. Yeah. And if I go through all the hoops, completely.
They might not necessarily see it as quite that bad because they're nice people and they love you.
Exactly.
But feel that way if that happened.
But the truth is that I need to be careful. And if I felt in that situation, if I was, lying in that bed and saying, I could have done something more to help here, I would feel like that's what kicks into my, just being like, I would feel terrible.
You would, on top of everything else.
Just for reference for the listeners, how long did it take you to get disability insurance? So that when we're saying, dear Aunt B, I didn't take, was it 10 minutes? Was it 10 hours? Somewhere in between?
I called I spent the next kind of day or like a really short time after, just kind of, because one of my big blocks was I need to find a broker. So I just was like, okay, let's make a list of people I can call. And I just started calling people. And so I was just like, I called 4 people. Insurance brokers are very prompt. I got a call back from somebody very quickly. And I, ended up getting he referred me to their disability person who was really good and answered a lot of my questions, and kind of, I felt comfortable with him. He was at my house the next week. He lived north of Toronto, but they make house calls. And so he was in my house, and he called me about a bunch of information, but he had brought specific policies that he thought would go well. What I liked a lot was that he had emailed and called a bunch of underwriters about an opera singer specifically and how to get me underwritten. And because one of my other blocks was that my occupational class wouldn't be covered. And so he had kind of gone to bat with me with a few people behind the scenes and just shown me that work.
That's awesome.
And he got me qualified, which I was really, I think is a 2A, which for artistic classes that are generally classified as uninsurable, he just had the right people to email in order to cut my premium in half from what it would have been if he wouldn't have had that email address. So that was enough for me to trust that he knew what he was talking about, and the way we talked about it. He had like a few stories like about how he's a legit insurance and salesman that he told every time that we met, but he's still a salesperson. But it was a really good experience, and I had I had the policy kind of confirmed within 2 months, but the work that I did was done in 2 weeks, including a house call for somebody and all that kind of stuff.
80 hours. Like that's
no. The amount of work that I did was researching people and then on the phone for probably around 20 minutes, honestly. It was very efficient. We spent an hour together with him kind of talking me through, and we filled out the policy right there. And then I got a call from the insurance company, and we did a health survey. I didn't end up having somebody come to my house to do, but that was something they chose not to do, not something that I chose not to do. It was not a lot of time. It feels really good. I'm so happy to pay that premium every month. I just like, I feel it, so it doesn't take a lot of time. And I think reframing it until you find a way to make it fit, it's something that's important. So just take the time if nothing we said today clicks, just think about the issue a little bit more and try to look at it from a different way, because it's an important thing, whether it's from the inconvenience that people have, or the inconvenience to you, or the fact that you can feel like you're still contributing, or, Preet's analogy, or, make it feel like you're just growing up and that you're maturing and that you're taking control of your life. Like whatever those things are, find the one that resonates and that motivates, because that stuff matters, but you have to find the thing.
Absolutely.
So I'm going to jump a little bit with another question for Julia.
Okay.
So you seem to know quite a bit about employer-based group plans and that sort of thing. So let's say that, again, I'm lucky, I've worked for an employer with a group plan, and then, like so many people do, I leave my job and I go somewhere else. When does my plan end? The day I leave, the day I give my notice? Do I get like 6 months of grace? How's this work?
Termination day.
Okay. So should I be thinking, unless I'm walking right into another job on day one, about some sort of bridge coverage, and is that easy to get? Or should I just hope I don't get into a car accident for 6 months while I'm on probation with the new place?
Bridge coverage can be really hard to get. So, yeah, it's really hard to get. And when you're newly self-employed, it's also really hard to get. So when it comes to disability insurance, sometimes people will get a small policy, a small individual insurance policy that kind of sits on top of their group insurance policy, because there's a maximum amount that you could potentially be insured for based on your income, right? And so you can't go necessarily get more disability insurance, or if you do, it's not going to be a whole bunch. So sometimes people will get a little plan that sits on top, and it's usually called like stepped coverage. So it would kick in at a point where your regular disability would fade off. That's something that you can potentially look at. But yeah, you're usually kind of in a bad situation when you're in between jobs. And if you're self-employed, you're usually in an even worse situation in that a lot of insurers won't insure you until you have like 2 years of self-employed income, proving that they are in fact insuring something. So you might be flying without a net for a while. If you belong to a professional association, you might be able to get some disability insurance through them. So that's something that you should look at as well. That's something that's available to you.
So you can add all that to your Dear Aunt Beatrice letter. Dear Aunt Beatrice. So it's just really hard to get a bridging benefit. And I just finished, and I'm just starting out right now, so I don't have a lot to insure, but I'll be staying on your couch for the next.
So if you are going to be a freelancer, become self-employed, if you can walk out with a year of income, to live off of, whether, your business fails or you do, at least it's a little bit of a safety net.
Yeah.
There's no perfect number there, but a year would be amazing. I did not have that much.
I feel like I talk to very few people who have it, but it's still a really good idea.
It's a super good idea. If you can do that, do it.
I feel like a year of income and also the skills to know that will last and to live within it.
Yes.
It's like the pairing that people don't talk about. It's like a year of income, you're like, but also an ability to know that you can live on that for a year, which is another.
You put it over here and then give yourself a paycheck. But about mortgage insurance, just so people kind of understand what this is, basically it is insurance that is offered by your mortgage provider. So your bank gives you mortgage, and then they're like, oh, by the way, you should be insured for life on your mortgage amount. So this is different from CMHC insurance, which is another thing entirely. But this is the life and disability and critical illness insurance that is on your mortgage itself. I do not love this. This is not great insurance. Every insurance advisor across the country will be like, ew, mortgage insurance, the worst. So what is wrong with mortgage insurance? Well, it costs about the same as term life insurance, and it covers the total amount of your mortgage. If you're doing the right things with your mortgage is going down. So is your life insurance benefit, and you're still paying the same amount. And when you die, or if you die while that mortgage is in place, the benefit gets paid, not to your family, to the lender. So declining insurance paid to your lender, that sounds dumb. And every time you go to get a new mortgage, you get a new insurance policy at your new attained age, and blah, 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 blah. It's just more expensive and dumb. Over time, if you qualify for insurance, go get your own standalone insurance, not mortgage insurance.
So it's basically the difference between like insuring your debt versus insuring your house. Could you say that? Like, it's kind of roughly the idea, like mortgage insurance is saying, I'm insuring this mortgage. And as the mortgage amount goes down, so does the amount that you're insuring. But you're insuring the debt, as opposed to saying at the beginning, I'm going to insure the value of it's still the value of the mortgage, but it's kind of attached to the house this time. And the nice thing about
the big difference is like, I'm protecting my bank, or I'm protecting my family. That's
a better way to put it.
Yeah. And that's what people don't realize, because the bank says, well, this is protecting your family because they won't have to pay the mortgage. And that's not a terrible thing. That's a good thing. But if you just pay roughly the same amount and get a standalone policy, like your mortgage is $250,000 at the beginning, and you have a $250,000 term insurance policy, and when you die, your mortgage is $200,000. You still have a $250,000 insurance policy if you bought term.
I have a question about this $250,000 mortgage. Is it on a small fishing shack?
It's in the interior of BC where there's apparently houses being sold for like $300,000.
Excellent. Yeah. Actually, probably the interior of the company. Honestly, just the whole middle part of the country. I think you can probably still find something for $350,000. Maybe not Calgary. I'm not sure.
I was trying to use reasonable numbers because then we get into like, oh, you have a $2 million mortgage. Everybody kind of shuts off and you're like, I'm in so much debt.
Feelings.
Right?
Yeah.
We're trying to stay away from feelings with insurance. Insurance is just numbers.
Well, mortgage insurance is definitely, it's one of those like life insurance, but even more than that people really encounter. There's like, if there's house and car, which are everyday kind of stuff, even renter's insurance, which is kind of in that area. Mortgage insurance is that thing where if you go through this milestone, if this is an experience that you have, somebody will talk about mortgage insurance to you.
And one of the worst things that I find is that a lot of times clients are saying, well, my lender said I had to get it.
Yeah.
And I don't know if their lender is in fact saying that, but if they are, they're lying. You do not have to buy the mortgage insurance through your lender. You should have insurance on your mortgage. I agree with that. But you do not have to buy it through your lender. No, you don't. And there's all kinds of things that are wrong with like the underwriting on mortgage insurance, and it's terrible. It's ugly. It's not reliable. Go get someone else.
Any more insurance questions, John?
Yeah.
I can't think of anything at the moment. I mean, if you've got anything that you think we should have asked but didn't, I mean, we don't have to pitch it as a question. You can just start giving us facts or anecdotes or stories. I mean, you've already shared a few of the anecdotes from your own life, but if there's anything that you want to give us as a cautionary tale or a tale of where something worked out well, feel free to do that as well, to sort of leave us on an inspiring note or a haunting one.
Which is inspiring in its own way.
Yeah.
Well, I do think, like, when the best thing that's happened for the people in my family who have ended up on permanent disability is actually talking to somebody who knows about insurance and cares about them, and calling that person when they were making a decision about which flex benefit program should I choose. Go in there with help. Like, it's not reasonable to assume that everybody's going to understand what the heck they're picking from. Get some help. Ask somebody. Whether there's lots of insurance brokers who actually will help you through this. There's lots of nice people that will help you through that. They might try to sell you something on top of it, but because they're salespeople, but they might help you through making those decisions. And that decision, just to pick the largest chunk of disability insurance that he possibly could has made the life of the person in my family who's on permanent disability a lot better than it could have been. Oh, and just another thought. When you pay your own disability insurance premiums, the benefit that you receive is not taxable. When your employer pays it, the benefit that you receive is taxable. If you're trying to convince your employer that they should bring in disability insurance, which you should do, tell them that you will pay your own premium. It's cheaper than getting it out there in the world as an individual policy. It's not usually as good of or robust of as a policy, but it's a policy. That's not bad. And if you're offering to pay your own premium, it's better for you. And it's an easy thing for your employer to provide.
That's a really good tip.
I've had a couple people go back to their employers and like talk them into it. And their employer's calling me being like, why are you asking my employee? And I'm like, I'm just trying to help you. They're going to stay longer if there's disability insurance there. And it won't cost you anything. Get the disability insurance.
God, just give them disability insurance. Oh.
It just reminded me of, I ran into some high school friends that I hadn't seen in 25 years. And I, like, off the cuff, I said one of the things I apparently have been saying for 30 years, which is if people would just listen to me, their lives would be so much better. I have yet to be proven wrong.
I just don't understand why that's not the tagline of spring financial plans.
Totally should be. Just listen to me. Not to do what I said.
Just do it. It'll be better. It'll be better.
Fine.
You don't want to make these decisions anyways. Just let me make them. They'll be better, and you'll be fine. It's the opposite of DIY.
Yes. Well, no, they should still go do it. I'm not going to do it. I'm just going to tell them what to do.
That's fine. Yeah, that's true. So there's still DIY. I'm going to work on an acronym later. I'm going to work on an acronym. John's going to work on a new list for insurance brokers that we can all trust.
Yes. And we're all going to read the Frozen Lager.
And then we're all going to read the Frozen Lager.
This is important.
I think that we're all going to have a pretty good week.
All right, that's all we've got for you today. If you liked what you heard, head over to iTunes and give us a really good rating. That really helps people find us. That would be awesome. And if you loved what you heard, why not check out our Patreon page, patreon.com/becausemoney, and lend us a little support so we can keep doing what we're doing. I am Chris Enns, and you can find me over at rags2reasonable.com. I'd like to thank my partners in crime, Sandi Martin, who you can find at Spring Financial Planning, springplans.ca, and John Robertson, who you can find Value It's Simple or his blog, Blessed by the Potato, which is holypotato.net.